we can now officially project that Donald Trump will become the 47th president of the United States. He will be going back to the White House.
Hey everyone, welcome back to the channel. Well, Donald Trump is back in office after the whirlwind of 2024 election, and the market are reacting big time. The S&P 500 and other indexes are at all-time high, and the optimism is through the roof. But now the real question is, should we keep riding the wave, or it is time to play safe? So in today's video, we are breaking it all down. First is what Trump policy might mean for the stock market or for crypto. Second is how history could give us some clue about what's ahead. And in the third part, I will show you the detailed part of investing now that we are under Trump. Alright, Trump policy. Let's start with the basic. His policy tend to be pro-business, and his last term brought some big tax cuts that boosted people take-home pay and really helped our company's bottom line. So now that he's back, they are talk about making those tax cut permanent. That could mean more money in your paycheck and more cash in businesses' pocket. That sounds great, right? But there's a catch. Big tax cut usually mean bigger deficit unless the government find a way to make up the money elsewhere. And if government debt keep rising, it could eventually push inflation up, and that's when interest rates start to climb, which can slow things down. What does this mean for us as an investor? Well, if inflation kicks up, the cost of borrowing goes up too, which could affect everything from the mortgage to business loan. That's why while it's great to enjoy the high time, we also need to think ahead. Next, we are gonna focus about crypto. This is where things get kind of interesting. Last time Trump was in the office, he wasn't exactly the biggest fan of cryptocurrency. Well, in fact, he openly criticized Bitcoin and other digital currency, calling them risky and a threat to the US dollar. So if his views haven't changed, we might see some tough love, aka stricter regulation for crypto. So what could this mean? Well, we might see more regulation. Trump team might push for the tighter rule around crypto trading, which could make it harder, especially for newer or smaller coin and platform. Second, it could bring some slow adoption. With more hoops to jump around, crypto adoption could stall. More regulation and maybe higher taxes on gain could make crypto less effective and attractive for some investors. But still, there will be a push for the US digital dollar, while Trump might be more inclined to support a government-backed digital dollar rather than decentralized currency, keeping control in the hand of the Federal Reserve. Now, it's not so bad. The crypto world is way more major than this was during Trump's first term. Major buying fund and even some government are getting on board with blockchain and digital assets. Even in America, a lot of senators or government elected are very, very pro-crypto. And there's a ton of potential here in supply chain management and data security and more for this industry. And the government people can use crypto as a hedge against inflation. Well, if inflation become a problem, people could start seeing Bitcoin and other limited supply crypto as a hedge. Well, after all, Bitcoin isn't tied to any one government, making it appealing in time of economic uncertainty. So while Trump return might not mean smooth sailing for crypto, it doesn't mean the ship is sinking either. It just means that we need to stay aware and be smart about how we approach it. Let's go back to 2016 when Trump was first elected. The market surged, especially in industry that align with his policy, things finance, energy, and defense. If you invested in the S&P 500 or similar asset back then, you would have seen some solid return in the years following. So the takeaway is sometimes the best approach is to stick to the long-term plan rather than trying to time the market perfectly. History shows that even when the market feels unpredictable, staying in can yield reward. There's a Charles Schwab study that actually found that even investors with bad timing who stay invested still did better than those who wait on the sideline trying to time the perfect moment. So while it's tempting to wait and see if the price dips, the reality is you could miss out some growth along the way. It's about finding a balance that works for you, staying diversified and not getting too caught up in the moment. So what's the game plan? As always, let's be smart. Here's how to approach the first next chapter as an investor. Diversify, diversify, then diversify. It's a classic tip really, but there's a reason for it. Relying on one asset type, whether it's stock, bonds or crypto can leave you exposed. Spread your investment to manage risk and take advantage of different opportunities. And you must consider dollar cost averaging or DCA. With the market as a high, DCA lets you dip your toe in gradually rather than going all in at once. This works well for both stock and crypto, especially since crypto can be super volatile. And you can use crypto as a potential hedge. Well, if inflation does spike, Bitcoin and other cryptocurrency with limited supply could act as a hedge. Just be aware of the risks. Crypto is still an evolving space and regulation could change quickly. And the final thing is be prepared for market correction. Remember, what goes up often comes down, and market don't go up in straight line forever. If things get too overheated, a correction could happen. So have a plan that's ready for both good and bad scenario. Alright, now I want to hear from you. What do you think? Trump return will feel the market boom, or are we going to hit some headwind? And what about crypto? I mostly recommend Bitcoin, but what crypto are you looking for? Any chances? And drop your thought in the comment below. And if you enjoyed this breakdown, don't forget to like, subscribe. See ya. Thank you.